Let's take a look at two paper assets that are one of my favorite ones. I mean, do you want to deal with constantly stock market fluctuations? To be honest, I don't, because you never know what the stock market can do. But these two ETFs, these two funds, are one of my favorites because they really don't fluctuate with the stock market. The first one we're going to look at is the iShares 0 to 3 month Treasury Bond ETF. Now, this one is one of my favorite ones. It's basically a US Treasury ETF fund. Very low risk, very low fluctuations. Basically, if the US government defaults or collapses, that's when you'll lose your money. Otherwise, you're gonna end up getting a steady 4.73% return for now at this point, and usually that's where that percentage is around. Very large fund, 27 billion, and 30-day yield is sitting at very decent 4.7%, very low risk level, and it's paying you 4.7%, and 12-month trailing yield is at 5.24%. That's pretty decent given the fact that there is basically no risk unless the US government defaults, which is not going to happen overnight. One day it might happen given the very high level of debt, but for now, that's not happening. So this is one of my favorite uh, funds that you can look and invest into if you're trying to gain that financial freedom which we all want to gain. Now, fees are very low, 0.09%, very low fees. And this is just showing that they're invested in short-term US Treasury bonds. Now, very, very low fluctuations. If we look at this chart here, we can see it's basically in 1 year, its price is at $100. It goes up and down by 50 some cents. Next favorite one is the CBIL one, which is being offered by Global X 0 to 3 month T-bill from the Canadian government. If you want to diversify from the US government to the Canadian government, then the CBIL one is the other option that I would highly recommend. It's right now trading at $50, and the price really doesn't change. It almost stays at $50 range. It can change a few cents here and there, but pretty much it doesn't fluctuate too much. It's again stating here the risk level, very low risk investment. The fund is quite a bit smaller than the SGOV iShares fund. It's sitting at $1 billion, just over $1 billion, and it's yielding 12-month trailing yield right now. It's at 4.74%, a bit lower, almost the same as the SGOV yield. So these two funds are very low risk because they're short-term US and Canadian Treasury bills. And the only way you can lose money basically if the US or the Canadian governments collapse or they default, which is highly unlikely at this point. Now, this is the chart for CBIL price. It basically fluctuates by a few cents over a year. This is over a year, and it fluctuates basically by 10 to 20 cents. It doesn't matter what happens in the stock market. Global X, T-bill, CBIL will be at $50 range basically, and it's going to give you that 4 to 5% return no matter what happens. So, not a financial advisor, but these are the two ways that I am diversifying my portfolio and lowering the risk and staying away from the ups and downs of the stock markets.